hello and good afternoon once again. So I've already done the midweek review of the trades I've taken this week on indices. So this one is specifically for gold, and yes, gold. So I do look at silver sometimes, but I haven't been able to trade it yet. So I'll just be talking about gold, but I will be referring to gold to silver a few times because they are correlated assets. So yeah. Uh, let's clear this up. Start by clearing this up. Clear the lipstick up kidogo. And then nice. So looking at that price action from Monday, um, I wanted to sell gold. So maybe I should go through that just a little bit. Just remove that. Mhm. Yes. Very nice. So on the daily, or maybe should I cover the weekly, guys? Yes. Let's do the weekly. So my analysis started from the weekly, as usual. You really need to have context. I mean, in this market. So this was a weekly fair value gap, and you can see that previous week, uh, here this close just above the range, and then price rallied to the upside. We tapped consequent encroachment of that weekly fair value gap and started to displace lower. So and then we got that very good close just below the 50% of that week. And even if we use this even better, so you can see that we had that close above. Yeah. Yes, so retested the zero point 0.5 level, displaced, and even went ahead to close below the 0.25 level. So this is reversed, so it should read 0.25. I guess the last time I used it was from high to low. So yeah, um we closed below that range. So I was sure that coming into this week, I wanted to sell on Monday and maybe even on Tuesday. I wanted just to sell on the for the better part of the week. So my most important levels included the previous week high, of course, so which was swept, which I will show you on the lower time frame. It was swept, I think, on Monday, or when was it? Okay, let's just leave that for now. Leave that be for now. So yeah, and then when I came to the daily chart, when you look at the daily chart, as usual, I just look at fair value gaps and swing highs and swing lows. So we had this daily fair value gap where price was reacting from very well. So you can see that last week on Wednesday, we had that uh, bullish move, uh, retested a huge part of this fair value gap, but remained below its 50%. And then we did that again and remained below consequent encroachment of that. And I think I've done something, or I will do something on consequent encroachment very soon and post it on YouTube on fair value gaps. And yeah, I think I will do something on that. So yeah, you can see that on these 2 days we had that reaction to that level. So of course, coming in on Monday, I want to see a continuation of the sales. We have a lot to target. We have this sell side liquidity, yes, sell side liquidity, and most importantly, I wanted to target an end dog that was here. This was a new day opening up between Monday and Tuesday, and then another one. This was an end dog. So I've been really wanting to target this end dog, and I still am targeting that end dog. So yeah, more of that will be shared in my Telegram. So we are here just to do the trade breakdown. So you have seen that my higher time frame context. Okay, so let's go to the 4 hour, which is still a very higher time frame context. And then now on the 4 hour, I think we can delete this, or maybe we should keep it. Daily fair value gap. I think I should just delete it because we have seen the reaction we are getting from it. So don't think I need it right now. So yeah, on the 4 hour previous week, now when we got that displacement to the downside on that daily fair value gap, I marked this out, this as my 4 hour fair value gap, and that was a very key level that I wanted to see being targeted. This was a very key level that I wanted to use to frame my short setup. Okay, so my thinking was I want to see price come, test this consequent encroachment, and then we can displace to the downside. Okay, so we did not do that on Thursday and on Friday. Okay, so I waited for Monday. I think on Friday we had what, NFP. Something happened on Friday. I think something happened on Friday. The reason I did not trade. Yes, I don't remember well, but something happened. That aside, I hope I'll remember before I end this video. What happened? Oh, yes, yes, yes. The markets were closed because of the Easter holiday, Good Friday, and so forth. So I wasn't able to trade this because that's the closed here. So I was expecting that Friday was going to do this move. I expected Friday to come, sweep this sell side liquidity. So this was marked in my charts as buy side liquidity. So you will see it better in on the 1 hour chart. I think we should even go to the 1 hour chart immediately. Yes, yes. I was wondering what happened because I did not trade on Friday. Yeah, yeah, yeah. Yes, 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 yes. So I expected this move to occur on Friday. I wanted price to sweep this, tap into this, and then we could drop. So NFP expected sales, which could push us to sweep this liquidity, 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 and then this NWOC. So basically, I just trade with swing lows, fair value gaps, and so forth. So yeah, this is a 4 hour fair value gap. So let's mark it in gray so that we don't confuse ourselves. Yeah. Okay, so I wanted to see that getting swept and then play out the trade the move to the downside. So on Monday when price opened, I hope I won't confuse myself here. Yes, 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 yes. So on Monday we opened here with this and WOG new week opening up right here. But since I had the context of the market, I knew that this, as much as it had been filled fully, I just wanted to see this getting swept and maybe retest this for a fair value gap and then displace to the downside. So I went, of course, I went to the 15-minute time frame now to start looking for entry. You know, as soon as you see buy side swept or a key level get hit, now you go to the lower time frame to start looking for an entry. Okay. So this happened during the London session. So this is what the London session printed. London session was printing higher low, higher lows, higher lows, higher lows. And that is what you want to see when you're approaching a key level. And you can see that we swept that buy side liquidity that I had marked from the 4 hour time frame. I think we started from the daily with this one. So I came with it from the daily. We swept it 4 hour, 1 hour. And then now we have swept it right here during the London kill zone. But of course, we do not take any trades after 5 a.m. up to 8:30 because that is a whole different time frame, not time frame, time window that I do not like to participate in. And you can see that even if you miss that trade, price will always come back because if I was to get in at that level, I was maybe to get in here at the 15 minutes. And then you can see that price wicked back into that area to give you a re-entry. So if you miss this, you will always get a re-entry during the New York AM session, which I have explained the times in the previous video, the other one for indices. So I do not like trading this one. I am sure that during the 8:30, 9:30, I will get probably a manipulation that will give me the re-entry that people took earlier. Okay, so that is just time and price. That is just time and price. So let's get into how I actually took that trade. Let's actually get into how I took that trade. I actually don't know how I didn't take it here because I don't think I took it there. I don't think I took it there. So, why am I getting confused? What happened? Something happened. I didn't take this trade there. Why? I think I missed that entry. So let's go to the 1 hour and see what happened. Um, I was waiting for a 1 hour change instead of delivery. Think so because this is 10, and I ended up taking the trade towards the close of the PM session. So um, what was happening? What was happening? Let's see. So this was the 1 hour, the 4 hour. What was the 4 hour doing? Because the answer has to be somewhere around there. Mm, this is the 5 a.m. candle. This is the 9 a.m. candle. We were displacing to the downside very well. Oh yes, I think I missed that trade and decided to take a re-entry. Yes, I missed that trade. I missed this because the New York AM session I was focused on. Yes, I was convinced that we were going to tap the consequent encroachment, so I wasn't sure about this move yet, and I wanted to get a confirmation that price was going to take out. Uh, yes, so I wanted just to confirm. Yes. Now I remember. I missed the earlier entry because if you look at this price action, once we swept that buy side and we were inside this, I wa an ideal situation was to retest the consequent encroachment, which we had not. But price displaced lower very well. So coming in during the AM session, I would have taken that trade after 9:30 open. Okay. So let's look at the 9:30 open. I was wondering what happened because you see how in hindsight you can see the opportunities you missed. That's how trading is. That's how trading is. So 9:30, where's 9:30 open? Here we go, here we go, here we go. So yeah, this is 9:30. So I would have taken the trade yeah, around there. So yeah, we had this up close to the upside during 9:30 open. So that is where I would have marked my now I remember. Yes, I did not miss this trade. I intentionally did not take the trade because my boxes were not ticked. Yes. Perfect. Perfect. Now I remember. Okay. So this is the last up close candle, which went even higher when we came to this level. All right. Ah, nice. Yes. So we had this up close, and then price retraced to the downside, and then it was unable to close below that down close, and then it formed another series of up close candle on the 5 minute. So of course I have to bring that higher on the on that one. Yes. Now I'm starting to remember this price action. So this was the 11 a.m. candle that was printing this. This was the 10 a.m. candle printing all this price action. So you can see that now we are rallying to the upside all of a sudden, and we have taken out the low that had formed, the high that had formed, and I expected it to hold. So this becomes my last up close candle. So where I expect my change instead of delivery was right here. So I came in and we got this change instead of delivery and a very good retest. But I was afraid because we were approaching the lunch session. And as I mentioned, I do not like to take trades within that time window. Also, my risk to reward ratio, if I had taken that trade there, would have been too big. So that is why I prefer to stay out and maybe look for a re-entry with less risk, you know, because you want to risk less and get more. So you can see that if I entered that trade there, I would have been risking 270 pips uh, to get. Of course, the risk to reward is very good, but risking 270 wasn't making sense to me at that point. Okay, so this is where my first entry was supposed to be. So I think we will mark it as our change in state. CISD, mark the entry. So this will be our first entry. This should have been my first entry. You can see that we got that retest almost immediately right here. So even just half of that, because this is the high, this is the current New York AM session high. So that is where my stop loss should be. And remember, I was targeting a lot of buy side, sell side liquidity to the downside. So it was a good RR, but I think I was just a bit scared of taking that trade. So we had this low, this low, this low. And I also think because I was trading Nasdaq, I was a bit um, my focus wasn't 100% on that trade. Yes. So this would have been my original entry, and I would have maybe trailed the stop loss as price was displacing lower. So now let's go to my actual setup, the one that I actually took. So yes. So I actually took that trade during the PM session, and I took it on the 15 minute, and this was my logic right here. So remember, I have missed this trade right here. So when the PM session opens, I want to see some form of rally to the upside and then a change in state, and then I can take that trade. So PM session opens at 1:30 right here. So we did not have that rally to the upside, and then we came over to at 2 sharp. So the 15-minute candle, the first 15-minute candle, this is what it did. It printed a very good bullish candle, which I want to see when I'm entering using a continuation order block. Okay. So what I do is I mark that as my last up close candle, and I wait for price to close below that, because this was the first one, but price was unable. It printed another one, and then that was the one that price closed below, because this is within this one. This one is within this one. So this is the one that you mark. And it has retested a few order blocks right here. So that was the right candle to enter with for the continuation of this move. Okay. So that is where I actually took that trade, and I'll put a screenshot here so that you guys can see. So soon as we got that small retest, I think I even entered just as it was retracing higher, because anywhere between this week, this and this, you can take that entry. So again, targeting lower, my stop loss now, that's where that's where that's where things went a little bit wrong. Because as usual, I set my stop loss just a little bit higher, at least 30 pips from this high. So I do not place it just on that high. You have to give your trade a little space to breathe, but and you have also to consider spreads. So I just put it at around 46.70, 46.69, and I wanted. So this is what I was looking for. You see the difference between this setup and this setup. I'm risking less on this setup. Okay, let's confirm. You see, right now I'm risking only 170. In the other trade, I was risking 280 pips. That's almost 300 pips on a setup. Yeah, so yes. Fast take profits, because this trade actually hit full take profit. So I think my take profits were around here. Let's use the 1 hour to set up a take profit so that you can see what I was targeting for that setup. Because if you can get even 2 hour on a setup, you're good to go. TP1 was at around 46.25, which was a very good RR already. That low right there, which was what? That's 46.25, correct? Yes, that was 46.25. Mm, I have to go all the way back. So yes. So this is the trade. Yes. I was targeting this loss. Now I see it. So yeah. I wanted to target this set of lows here. You see, this one on the 5 minute. You can see them clearly on the 5 minute. So that was my first target, TP1, and it's a very good risk to reward. 1.4R. 1.4R is very good. Yeah. Um. So I held this trade overnight together with the US 100 and 500 trade that I have shown you in the other video. Okay. So when price opened, we had that bullish surge to the upside. We had that bullish surge to the upside and opened with a gap to the upside. So this is where some of my accounts were stopped out, because the stop was at around 46.68. But you know, different brokers have different spreads. So some of the brokers with wide spreads during the opening range, the new day open, the true day open, I was stopped out during this surge. But the trade played out very well, full take profit, and I'll put a screenshot of an example of the accounts that I was stopped out. Most of the accounts I was stopped out. And yeah, so this was the first trade. Uh, I will say this was a success, and I will just say the spreads took me out. Yeah, yeah, because this was a very good trade, stop loss placement, entry, everything that should be considered was considered, and I took the trade very well. So on this one, it was just not mine. Just say that and move on. So let's move on to the trades I took yesterday. Very good trades. I took sales. So all this price action is this bullish surge to the upside. I know you remember this. This was what Trump did. So this is all Trump. So let's go to the higher time frame and do the last one. So this one I actually took it and it went well. It went well. Yesterday was a good. Gold has been good to me this week. Gold has been good to me. Broker ndiye anajaribu kunimaliza na this fucking spreads. Oops. Buy side liquidity. What? Okay. So my logic yesterday was that we had this bullish surge to the upside, swept this liquidity, uh, even dipped into these 4 hour order blocks and so forth and so forth. So, but my logic was uh, the war did not happen. So, if the war does not happen, what do we expect? We expect gold to do a correction of the move that it did when investors were moving their money to gold. So, Trump put a ceasefire for around 2 weeks on bombing Iran. So, of course, gold will not continue buying if there is not war or anything that is forcing investors to move their money to gold as a safe haven. So, of course, I expected a sell. So, when I'm expecting a sell, as usual, I need to have targets. My first target was consequent encroachment of the gap that I'm marking right now. And you already know that is a new day opening gap, not a new week opening gap, because this is Tuesday, this is Wednesday. What? Yes, this Tuesday, this is Wednesday. So that is a new day opening gap. So I wanted to target. Is it an end dog? Yeah, it's an end dog. So that is what I wanted to target. And 50% of that was 47.21. So I wanted to see price come to this level and then continue with the bullish move if the war was going to continue. So for now, we are in a very decisive point, and it all depends on what Trump does. So we'll know if we are going to continue to the downside or to the upside. That's something for another day because that's another outlook, a daily outlook, maybe for tomorrow when we have CPI or something like that. So stay tuned in my channel. Okay, I'm starting to digress. Okay, so this was my target yesterday, 47.21 to be specific. 47.21 was my target. So I wanted to see price sell and then buy, continue to buy. So if I'm looking for sells, of course, I want to also see what the other DXY and so forth. So in the other trade, I have not shown you what DXY was doing. So maybe before I go through this, I should show you real quick so that you can see the kind of confluence I had for that trade. So this was the 1 hour chart on DXY. And then we had this Wednesday's fair value gap. You can see that we are starting to build from the same day that I built the gold trade from. The gold trade, I also built it from Wednesday last week. So this was a hourly fair value gap on DXY last week. And then, of course, again, we have sell side liquidity resting just above an imbalance. Perfect. So I just wanted to see price sweep this to the downside, dip into this level, and then displace to the upside. So of course, if I'm expecting that, so when price did this on Monday, you can see that Friday we did not have any price action because of that Easter thing. So on Monday open, when we did that, I was sure that price was going now. As gold, as what am I saying? As DXY was displacing to the upside, okay, after tapping the key levels, I wanted now to see gold displaced to the downside, and that was why I took those sells on gold here. Okay, right here after this sweep. So you can see we have taken out this high and we have taken this low on DXY. So that's how you do it. You take a low on DXY, you have to take a high on gold and then displace to the downside as you displace to the upside on DXY. So yeah, mm, najua hapo hivyo mmekuwa confused a bit, but you get what I mean. I'll also do a video on DXY and XAU USD. So where was I? This was my target yesterday, and I came to silver just to see what silver was doing, and I noticed that we had an SMT between this high and this high. So now you can see that I'm starting to align confluences for my trade. Okay, so that's an SMT. We have the same end dog here, new day opening gap, market in end dog color so that I don't get confused. Now DXY. So for DXY, let's delete this because we're done with it. Yep. I've done a very shady explanation on DXY on that trade, and I feel guilty about it. So let me just do it very well. I was starting for the 4 hour. So we had been reacting from this 4 hour fair value gap on DXY. So I expected it to displace to the downside. We came again and did that. So I expected it to displace to the downside, sweep this liquidity, get into that fair value gap and displace to the upside. So that is why on Monday, when we dipped into that after sweeping this liquidity twice, I now wanted to see DXY displacing back to the upside to that fair value gap and gold displaced to the downside, because what you see on DXY, you want to see the opposite on gold. So with that logic, I come back and notice that price has been unable to do that on Monday. We have been unable to do that, and now we are displacing to the downside. Yes, so on Tuesday after Trump's doings, this is what we had. We had this huge displacement to the downside, which caused a new day opening gap again on DXY. So as usual, the opposite of what I'm expecting on gold. I'm expecting gold to dump lower. So I want to see this one go higher, sweep buy side, retest this end dog, this new day opening up, and then so this is sell side liquidity. Let's go to the 1 hour. Buy side liquidity. Let's use the 1 hour. Looks better. This is BSL, buy side liquidity. Okay. So as I've explained, I want to see the opposite of what I expect on gold. So on gold, let's put the gold chart here. So we had almost three confluences: DXY, SMT between silver and gold, and so forth. So on DXY, I wanted to see this high getting swept. So remember, this has not played out. This all of this price action. Now this is yesterday's price action, and that is what I expected. And I will put a screenshot right here. So I wanted to see DXY sweep this buy side, retest at least 50% of the new day opening up, and then start displacing to the downside. Okay. So if I'm expecting this move, what am I expecting on gold? I'm expecting gold to displace to the downside. Okay, so what other confluence do I have for that? I have the SMT. I have this low, this high, this is 8 1. So yeah, you can see we formed a higher high on silver and a lower high on gold. Okay, so that becomes SMT, and that paired now with what DXY was doing. I was pretty sure that price was going to displace to the downside up to this target. And you add that to the fact that Trump had uh, decided to cease fire on Iran. So I was sure that we were going to get this correction of all this displacement to the upside. That was really uncalled for. Okay. So this actually now becomes a very balanced price range, and I expect price to dump to the downside. But we will go through that in our analysis tomorrow. So how I took this trade. Now let's go to the lower time frames. Uh, that's basically it for higher time frame and how I decided I was going to sell yesterday. So you can see that we had this 15-minute candle. Of course, I did not take the trade here because this was Tuesday, still on Tuesday, blah blah blah, Asia session. So here comes the London open. Okay, London kills on open at 2. Okay, so what do we get? Before that, we had this huge candle to the upside. So that becomes my last down close candle, which I have to mark as my last down close candle. And as soon as we got this close at 2:45, that became my 15-minute change in state of delivery as usual. So as soon as that happens, come and place my short position right there. I told you that if it's less than 10, displacement of less than 10 pips, you can just take that trade immediately with an aggressive entry. So my protected high is this high. You can see we were unable to break that. So I do not expect that high to be broken anytime soon. Or if you want a trader stop loss, you can put 50% of this week. See, this is a premium week. So you can put 50% of that. But I decided to go with this. Then again, my target, same. First of all, you can start with this order block as a partial. That's what I did. I took partials there. And then you can also go to 50% of that. Another option is to go with 1:1, which is very safe. 1:1 RR. But for me yesterday, I wanted to take profits here. But I was closing partials as usual. I take partials a lot. So yeah, that was the trade. Full take profit hit. I think I added a few trades during the 9:30 open. Yeah, 8:30, 9:30 open. I added a few trades right here. Yes, I added a trade here. Let me show you. So you can see we had at 9:30, we had this displacement to the downside, had a retracement to the upside. So now we are looking for a continuation order block. So if you're looking for a continuation order block, this is where you want your change in state to occur. Right here. So as soon as I got that close, I took the trade as price was retracing to the upside. And then, so that was another short position. Stop loss for my continuation is there because this is the last up close. This is the last high that has formed. So according to order flow, I expect it to be respected. And still I got a clean 2.32 and another 2.6. So I took both of these trade and I will put a screenshot here so that you guys can see. Those who are in my group, they saw this in real time. Yeah, full TP was hit. So yeah, that's why I was saying gold has been good to me so far. And yeah, and DXY also played out very well. You can see that we were able to go back and sweep that buy side. We have not yet retested this end dog, which I expect to be done. So I expect something like okay, I'll not do that here because this was just meant to be a midweek review, but I expect the XY to tap the consequent encroachment of that. And let's talk about something interesting here in this price action right here. So, do you think it's a coincidence that price has remained within this new day opening gap? Do you think it's a coincidence? That's your homework for the day. Look at the 4-hour chart. Do you think it's a coincidence that price is remaining within the new day opening gap? Okay, so that is why I mentioned in the morning that I expect some form of consolidation all through today. Maybe you can get some movement in the PM session as we prepare for CPI tomorrow. Yeah, that's all for today and for now. Stay tuned. Make sure you subscribe to my channel. Yeah, thank you for tuning in.